Shares of MGM Resorts International MGM are moving on volatility today 2.29% or 0.70 from the open. The NYSE listed company saw a recent bid of 31.27 on 1,770,000 volume. Investors might be trying to figure out the best way to approach the stock market. After creating a plan that includes a list of stocks to purchase, investors may be looking to gauge the best time to enter the trade. With markets still cruising along at high altitudes, investors may be worried about buying at the top. Most individuals would probably agree that getting out before the market drops would be the best play. Obviously, this is much easier said than done. If the warning signs were blatant, everyone would know exactly when to sell and when to rebuy. When the stock market has a big decline, the natural instinct is generally to sell in order to protect gains or eliminate further losses. Trying to time the market can have negative implications for investors who are not prepared to handle extremely volatile market conditions. Being prepared for any sudden change in the overall economy or stock market conditions may help the investor stay afloat for the long haul. Now let's take a look at how the fundamentals are stacking up for Noble Energy Inc. NBL. Fundamental analysis takes into consideration market, industry and stock conditions to help determine if the shares are correctly valued. Noble Energy Inc. currently has a yearly EPS of 4.24. This number is derived from the total net income divided by shares outstanding. In other words, EPS reveals how profitable a company is on a share owner basis. Turning to return on assets or ROA, Noble Energy Inc. NBL has a current ROA of 4.33. This is a profitability ratio that measures net income generated from total company assets during a given period. This ratio reveals how quick a company can turn its assets into profits. In other words, the ratio provides insight into the profitability of a firm's assets. The ratio is calculated by dividing total net income by the average total assets. A higher ROA compared to peers in the same industry would suggest that company management is able to effectively generate profits from their assets. Similar to the other ratios, a lower number might raise red flags about management's ability when compared to other companies in a similar sector. Another key indicator that can help investors determine if a stock might be a quality investment is the return on equity or ROE. Noble Energy Inc. NBL currently has return on equity of 10.15. ROE is a ratio that measures profits generated from the investments received from shareholders. In other words, the ratio reveals how effective the firm is at turning shareholder investment into company profits. A company with high ROE typically reflects well on management and how well a company is run at a high level. A firm with a lower ROE might encourage potential investors to dig further to see why profits aren't being generated from shareholder money. Another ratio we can look at is the return on invested capital, or more commonly referred to as ROIC. Noble Energy Inc. NBL has a current ROIC of 5.76. ROIC is calculated by dividing net income, dividends by total capital invested. Similar to ROE, ROIC measures how effectively company management is using invested capital to generate company income. A high ROIC number typically reflects positively on company management, while a low number typically reflects the opposite. As the next round of earnings reports comes into swing, investors may be deciding how to get into the best position to make the most profitable trades. Earnings reports have the ability to influence stock prices dramatically. Sometimes it can be hard to figure out which way the price will go even if the reported numbers are up to snuff. Some investors enjoy the frantic trading opportunities around earnings reports, and others will stay as far away as possible. Even if the investor isn't planning on making any moves during earnings season, it may be wise to follow what companies are reporting. If the numbers from a certain holding come in way out of W, it may be necessary to do some in-depth research to try and find out the reason. Investors that make sure that all the bases are covered will typically find it easier to make sense out of certain anomalies that pop up in the markets from time to time. Putting in the extra time and effort to understand the ins and outs of a particular stock may help boost the novice investor up to the next level. Every investor wants their trades to be profitable, and doing that little extra piece of homework could be just what the finance doctor ordered for staying on top of the stock market.